So imagine this, you had an amazing last year in your investments and in your business. You went through the holidays, had an amazing time with friends and family. This new year came and you were excited. You said, I'm gonna take on this year, I'm gonna achieve my goals, my business is gonna expand and grow and explode. You continue to start hitting, you go through Q1. You were so excited about the prospect of this new year and what you've already accomplished to this point. But then you get a call from your CPA and they tell you that you owe $50,000 in taxes. Unfortunately, this story is not a nightmare, but it is real life for many clients and folks that I have spoken to over the course of my career. So in this video, we're gonna talk about how do you stop those tax day surprises. And if you were surprised this past tax season, this video is for you because I want to make sure that this year is better than any year you've had since. So let's jump right in. So there's a couple ways that we combat this. And when I work with clients, I take them through a whole process, but I want to make sure that as you watch this video, that you have the tools to help yourself and bring this information back to your tax preparer, back to your CPA, to make sure that you are prepared for this upcoming tax season. I do want to make note though, that not every CPA is a tax advisor. So before we even get into any of this content, any of this information, I want you to understand that if you are not working with a tax advisor, you're kind of working from a handicap. The reason being is that those professionals that you're working with, while they may be excellent at their job, while they may be solid with their numbers, while they may have a high level of integrity, if their focus is not to help you strategize throughout the years to save on taxes, then you are going to encounter this circumstance year over year over year over year. I want to actually just give you an example. So a client of mine is a physician, and in addition to a physician, they also have rental properties. And so they were doing a fix and flip, and then also doing some locums or essentially traveling medicine. And I was talking to them through the situation, trying to understand, where do you stand in terms of your finances? What does it look like in terms of their tax liability for 2025? So prior to this, I had not been working with them and just trying to understand where they were as a new client, right? And I asked some basic questions. Do you have an S Corp? How are you allocating expenses for your rental property? Do you have a spouse that you can do real estate professional status with? And when I asked these different things and I said, did you ask your accountant about this? Did you ask your CPA about this? They had no clue about any of these strategies or how they would be a benefit to them. And unfortunately, this scenario is more common than not. So many CPAs, great people, but they are not working for you as the business owner, as the entrepreneur, as the investor. They unfortunately, because of their lack of knowledge, are working for the IRS because they are not able to support you in getting the best results possible. So that out of the way, let's talk about how you can be proactive if you are actually working with somebody who is able to advise you and help you to strategize and plan in advance of tax season. So the first thing that I would walk through with clients and what I recommend you do as you work with your professional is to enact something that is essentially a three-phased approach. So the first phase is going to involve an assessment of your financial landscape over the entire year at specified intervals. And so we're going to look at things like, how are your rental properties performing? What other income do you have coming in? Are you married? Are you single? Do you have children? What potential life events will you encounter throughout the year? And if with that information, you are now able to project over the entire year what your income is set to be by the end of the year. I want to just make it clear that your tax bill is made during the year. It is not made during the first 4 months of a new year. It's made for 31st. And so if you're not proactive, if you're not assessing your financial position on a consistent basis, you're going to be blindsided. The second phase of this three-phase strategy is to have well-maintained financials. So we've spoken about having projected income projected expenses. But now we need to rely on well-maintained financials, whether it's W-2 income, rental rolls, if it's profit and loss statements for your business. We need to make sure that information is well maintained. I can't tell you how many times I've had clients come in and their documents are a mess. In fact, I had a client last tax season who said, yes, my project manager, they keep my financials. And when I got the documentation at tax time, it was absolutely deplorable. I spent hours and hours with my team poring over the information, trying to get it to the right spot because we really could not digest the information that the property manager said that they had accounted for. And so make sure that you have well-maintained financials. And so the first phase is having well-maintained financials. So all that said, phase 2 is to make sure that you are doing quarterly estimates and using those quarterly estimates to have check-ins with your tax advisor. That is an excellent time to get an assessment of what your tax bill is projected to be for the next year and how you can start to implement tax mitigation strategies so that you can avoid those taxes legally for the upcoming year. Phase 3, this is a crucial step. And I think that this is what impacts business owners and investors the most. It is so unfortunate when I have a client come to me saying, hey, listen, I'm selling a property. Hey, listen, I started a new business. Hey, listen, I sold my existing business and I'm selling it for $500, $600, $1 million. And I've already inked the deal. How can we avoid taxes? If you come to your advisor in January, in February, in March, and that's the conversation that you have and you're letting them know, hey, listen, this is what happened in November of last year. This is what happened in August of last year. It is very, very hard for them to be able to support you. If you're not proactive in terms of your planning, it can literally cost you hundreds of thousands of dollars. So phase 3 is having proactive conversations. Don't just wait for quarterly conversations. If you are working with somebody that you trust, I implore you, when you are thinking of making a move, when there is an opportunity for you to make a pivot, to sell something, to a large sum of money because of an investment opportunity, if there's a change in your income, whatever that may be, that is the time when you need to reach out to your tax advisor and say, listen, this is what's going on with me. So can you help me navigate this? Or this is even better. So what does that mean for me at tax time? Because I want to be knowledgeable. I want to be able to say, okay, I get it. I know what happens. And so if I get hit with $100,000 bill because this was a one-off event, then I know that and I can prepare. So I hope that this information is helpful. I want you to remember, number 1, make sure you maintain your finances well. Make sure your documentation and your records are accessible physically, but also accessible in terms of being able to extract the information and the data that you need from it. Number 2, have those quarterly projection and quarterly estimated conversations. And number 3, be proactive. If you do these 3 things, I promise you that next year will be the best year that you've had. If you found this video helpful, please go ahead and click the link here and check this one out.